Hello once again and welcome back to the channel. My name is Anupam Anand and you're watching Freedom English. So today in this video we are going to discuss about yet another IPO launch that is catching a lot of attentions from the investors and why you should be also thinking about it. The company's name is Standard Glass Lining Technology Limited and the IPO is getting launched on January 6th of 2025. So in this video, we'll explore Standard Glass Lining's business model, market revenue, we'll be doing a quick SWOT analysis, and also we'll be comparing this IPO with the other competitors in the same sector. So make sure to watch it till the end so that you have a better understanding of this IPO and whether you should be investing your money in this or not. And before going ahead, please make sure to like the video, subscribe if you haven't yet, and drop your valuable comments. Standard Glass Lining Technology Limited, the company specializes in manufacturing high-quality glass-lined equipment and other engineering solutions for industries that handle corrosive chemicals, such as pharmaceuticals, chemicals, and agrochemicals. Its capabilities include designing, engineering, assembly, manufacturing, installation, and commissioning solutions, apart from setting up standard operation procedures for pharma and chemical manufacturers on a turnkey basis. The company has a diversified customer base, including end users operating in various sectors across pharmaceutical, chemicals, paint, biotechnology, and food and beverages. As of June 30, 2024, the company's customer base includes 30 of approximately 80 pharmaceutical and chemical companies in the NSE 500 index. Founded in 2012, this company is located in Hyderabad, Telangana, and has been operating really successfully since then. Okay, so now we understand that the company is providing or manufacturing solutions for the chemical, pharmaceutical, and agrochemical industry. But first, let's have a quick look at the company's portfolio, what they really manufacture. Number one is glass-lined equipment. So glass-lined equipment is a type of process equipment with a glass coating on its internal surfaces that makes it resistant to corrosion and contamination. So the equipments include reactors, storage tanks, and columns. And also these equipments are designed to handle corrosion in the industrial processes. Number two, mixers and agitators. So the company provides customized mixing solutions for the chemical industries. Number three is heat exchangers. So they also make shell and tube heat exchangers for the thermal efficiency in industrial operations. They also manufacture other accessories like nozzles, side glasses, and manhole covers designed for glass-lined equipment. Also, a quick look at their manufacturing capabilities. The company has a state-of-art manufacturing facility in JD Metla, Hyderabad, equipped to meet international quality standards. And the annual production capacity of this manufacturing hub is over 5,000 tons of glass-lined equipments. Okay, now talking about the market presence of the company. In the domestic sector in India, the company serves a lot of companies who are in the sectors of pharmaceutical or chemicals. So it's manufacturing necessary equipments for companies like Dr. Reddy's, Sun Pharma, and UPL. And in terms of the international market presence, the company is making 15% of the total sales from the outside or international countries like Europe, Southeast Asia, and Middle East. Now some IPO details about the company. The company is set to launch its IPO on December 6th. Before that, let's talk about some numbers. The issue size is rupees 410.05 crore, including fresh issue, that is rupees 210 crore to fund capacity expansion and debt repayment. An offer for sale is rupees 200.05 crore by existing shareholders. The price band that is being offered is rupees 133 to rupees 140 per share. The face value is rupees 10 per equity share. The lot size is 107 shares, requiring a minimum investment of rupees 14,980 rupees at the upper price band. The IPO opens on January 6th, 2025 and closes on January 8th, 2025. And the listing date is tentatively decided on January 13th, 2025 on both NSE and BSE. Now let's quickly have a look at the purpose of this IPO. Why is this company raising IPO? Number one is working capital requirements. The company wants to grow its operations, so it requires nearly 80 crores to support that. Reason number two, debt repayment. Nearly 70 crore of financial leverages is there. Number three is capacity expansion. They are planning to expand, so they're looking forward for rupees 50 crore for upgrading or expanding the manufacturing facility and some other general corporate purposes. Okay, now let's talk about the financial performance of the company, the revenue, the profit making of the company, how is it going. We'll have a quick look at this chart where we have mentioned fiscal year from 2020 to 2023. We have a comparison of revenue, profit after tax, net worth, net profit margin. So let's have a look at the financial year 2020-2021. The company made a revenue of rupees 350 crore. Profit after tax was rupees 32.50 crore. Net worth was rupees 225 crore. The net profit margin of that year was 9.29%. In the fiscal year 2021-2022, the revenue was 420 crore. Profit after tax was 45 crore, net worth was rupees 270 crore, and the net profit margin was 10.71%. And talking about the previous fiscal year, 2022-2023, the revenue was 500 crore. The profit after tax was 53.40 crore. The net worth was recorded 315 crore, and the net profit margin was 10.68%. Coming to the key financial matrix, earnings per share (EPS) is rupees 6.25 as of financial year 2022-2023. The price to earning ratio (PE) ratio is 22.4x at the upper price band. The return on net worth (RONW) is 16.95% in fiscal year 2022-2023, and the debt to equity ratio reduced from 1.2x in financial year 2020-2021 to 0.8x in financial year 2022-2023. Okay, now the favorite part of mine, SWOT analysis. We will quickly analyze the strengths, the weaknesses, the threats, and the opportunities the company has. Talking about the strengths first, the company has a leading market position. It's among India's top 5 glass-lined equipment manufacturers, so that gives the company a major position in the market, of course. Another strength of the company is that it has a diverse product portfolio. It ranges from pharmaceutical, chemicals, and agrochemical sectors. So the company is manufacturing and catering to multiple sectors, and it is, of course, a great point about it. And another strength about the company is that its export potential. So the company has great potential to increase its sales in the international market as well. Now coming to the weaknesses. The first weakness of the company can be that it requires high capital throughout to maintain its manufacturing unit. Another weakness to be pointed out that it has currently less export revenue. So the overall sales from the international market is just 15%, indicating that there is a room for improvement. Okay, now talking about the opportunities, the demand for glass-lined equipment in the global market is increasing due to stricter environmental and safety regulations. Another opportunity for the company is that its capacity expansion can be done. So as the demand grows, the company will look forward to increase its manufacturing capabilities. Also now talking about the threats to the company, the first one being intense competition. Though this company is actually among the top 5 companies in India, but both internationally and domestically it has heavy competition. Another threat to the company is the economic downturns. So in the past few years, we have seen a slow growth in the industrial sector, and that can actually impact the company in the long run as well. So that can be a threat for the company. Okay, now we will quickly compare Standard Glass Lining Technology Limited with the other competitors in the market. So on the charts, we have GMMP Pfaudler Limited, we have HLE Glass Coat Limited, and also we have Swiss Glass Coat Equipment Limited. And we'll be comparing the revenue, the market share in India, and the focus areas of the company with Standard Glass Lining Technology Limited. So first we have Standard Glass Lining Technology. They made a revenue of 500 crore rupee. The market share in India is 15%, and the focus areas of the company is pharmaceutical and chemical sectors, wherein GMMP Pfaudler Limited has a revenue of 2,000 crore rupees. The revenue of GMMP Pfaudler Limited is 2,000 crore rupee. The market share in India is 45%, and the focused area is glass-lined reactors in the global market. Also, we have HLE Glass Coat Limited with a revenue of 1,200 crore rupee, and market share in India is 30%, and the focused area of the company is process equipments and chemical processing. Now we have Swiss Glass Coat Equipment Limited with a revenue of 800 crore, and the market share in India is 10%, with the focus area of the company being specialized glass-lined tanks. Now if we talk about the valuation matrix, EPS growth of CAGR of 15% over last 3 years have been recorded. And if we do a P ratio comparison, Standard Glass Lining has a P ratio of 22.4x, GMMP Pfaudler has a P ratio of 45x, and HLE Glass Coat has a P ratio of 38x. Now talking about the GMP, the grey market premium of the IPO. So as of January 5th, 2025, the GMP of the company stands at rupees 20 per share, suggesting moderate listing gains of around 14.3%. based on the upper price band. Okay, now coming to the point why you should be considering this IPO and what are the risks involved. The first reason for your consideration of this IPO can be that the company is actually catering to multiple sectors like pharmaceutical, chemicals, and agrochemicals as well. The second point to consider is that it's making good profit and revenue over the years. And the third reason can be the positive GMP showing good sentiments in the market. Okay, now talking about the potential risk the company has. The first potential risk of the company can be that it's dependent on very few key sectors to make revenue. And the second risk can be that the valuation could limit short-term upside. Okay, so that was an overall comprehensive analysis about the company Standard Glass Lining Technology Limited. I hope this video was informative for you and it will help you to decide on this IPO whether you should go for it or not. But just in case if you're still struggling with picking up IPO, picking up stocks, or if you have any such questions about the P ratio, about GMP, why is it there, how does it affect the stocks, please make sure to download the Freedom app. We have dedicated courses which will help you to understand the basics of stock market, and you can be a smart investor after learning these courses. Please be a smart investor, do your research well, learn the courses from the Freedom app to become more smarter. Download the app now. And before going away, please make sure to like the video, drop your comments, and subscribe the channel if you haven't yet. See you in the next one.